what does the future hold? Because most people have no financial education. Their cash keeps flowing out. Number one is taxes. Invest in what you know.
Right.
Very important.
And very, 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 very important. Is this sound advice? And while that money flushes out and there's no pork chops out there, there's going to be a fight at the counter. You know what I mean? Most people have no idea what that word means. It's going out. So financial intelligence or financial IQ is, can you turn your cash flow back into you? And because most people have no financial education, their cash keeps flowing out. Number one is taxes. Number two is they buy that house they call an asset, but it's actually cash flowing out to the bank. And number three is your 401k or your IRA, whatever you got. The cash is always flowing out. It is the most important thing a person can do. So you want to see the future. You want to see which way cash flows. That's what smart guys do.
U.S. home prices adjusted for inflation going back to 1900. But you're also buying assets that you could depreciate on paper. So you could take that cash flow and you didn't have to pay taxes on it. Well, they changed the measurement of inflation, so it increases the tax bracket slower than it otherwise would have. So if inflation is going up at, let's say, let's just take it to the extreme and say it goes up 100%. Well, if they only increase the tax brackets by 2%, then you're going to be paying a lot more of your income in taxes, a greater percentage, although your purchasing power might not go up. So the government is playing all of these tricks to make sure that they pick your pocket, whether it's explicitly or implicitly. And that also applies to GDP. You know, if we've got nominal GDP at 5% and the government or the Fed is telling us that real GDP is 2%, that's because they're adjusting 3% for inflation. But what happens if that number that they're adjusting by is artificially low, that means that GDP is artificially high. So if you go back the last 10 years and say, boy, you know, this economic boom or this recovery that I've been hearing about on the news, it doesn't feel like it's been a recovery. Yeah. I mean, I hear everyone talking about it, but it sure doesn't feel like it to me. That's because if you actually adjusted for the real rate of inflation, real GDP might have been zero, if not negative, over the last 10 years or so.
And right now, the cash is flowing out at high speeds. The average person doesn't know what the repo market is. And that's where the hemorrhaging is taking place.
All these banks in the United States, hedge funds, financial institutions, and they need cash. They have a lot of assets. Let's say they've got a big piece of land, but in order to make payroll or rent, they can't sell that land quickly. So they have to come up with the cash. So they'll use that land as collateral. And I'm just using this as an example. They'll use that as collateral to get the cash they need to fund whatever it is overnight or a term repo, maybe call it 20 days, 30 days. So these are repo agreements or repurchase agreements. It's just a quick loan between two parties. So if Robert has a truck, let's say, and he needs $1,000 to pay some bills. Well, I've got the $1,000. I'll give it to Robert. He gives me the truck as collateral. We trade back the next day, and Robert gives me a little bit of a premium for that loan. That's what a repo is, or a repurchase agreement. It's just done between all these banks. If you're able to just start to understand the macroeconomic picture, and it doesn't need to be complex. Listen, the reason you think it's complex is because all these economists and academics, they use all this jargon and technical terms. But if you just break it down into simple English, it's actually very easy for people to understand. And if they understand it, they're going to be able to make much better decisions for themselves and their family in the future for their finances. So whether it's me or anyone else, make sure that you're trying to really pay attention to what's going on. So that was the first rumblings that you saw in the repo market.
What happens is the debt to the consumer. I could go and buy a house for, like, say, 3%. But in the repo market, they raised the interest rate to 10%.
Overnight, yeah.
That meant they didn't trust the banks. The banks can't cover their shortfall.
Well, what the average person doesn't realize is they're taking exponentially more risk just to get that 1% additional return. So how is that? Because the way that the money market mutual fund gets the additional return is they take your hard-earned savings and money and they put it into the repo market. Or they put it into the commercial paper market, which is basically funding for corporations, the same type of thing. Going on with the plumbing, they don't care about the dollar swaps. But does that person really want to lend their hard-earned savings to Deutsche Bank, to HSBC, some of these banks that could be crumbling as we speak, or to put things into other terms like more America-centric corporate terms? Would that individual want their money being lent to American Airlines right now, or Boeing, because they're about to go bust? That's how this macro, and that's how the cash flow and the plumbing that Robert's talking about, that's how, just one way that it can affect the everyday person.
So if our banks are going bust right now, what does that mean? Do you know what I mean?
Yeah, it's not just the banks, it's the government, it's the private sector, it's our entire economy, because these debt cycles run in courses of 75 to 100 years. And as an example, if you just own your own home, you've got to make sure that you've got a 30-year fixed rate mortgage, because if they try to create inflation, if interest rates go up, then your interest rate is going to go up unless it's fixed. And what happens when you're a debtor and they create inflation, you're going to have the opportunity to pay the loan back, your mortgage, with cheaper devalued dollars. So what happens in inflation, though, is inflation allows the borrower to pay the debt back with less purchasing power. So if your rate of interest, let's say, is 1% or 3%, we'll call it, but if inflation goes up to 5-6%, the delta between those two is a transfer of purchasing power from the bank to the individual homeowner. How important it was to invest as an insider. From an economic standpoint, I think the biggest question is, do we have deflation or inflation? And that's kind of the debate going back and forth. And for the average person, I think they just have to look at the entire economy as supply and demand. What's going down faster, demand or supply? So if there's more money in the pocket of the average person, that means there's more demand in the economy that don't require debt. That's key, because people see deflation and inflation as just this, it's binary. Right? It's either one or the other, but it's actually very nuanced. So if there's less debt in the system, that means asset prices could go down, or cars, anything that most people buy using debt. Yep. Okay, the prices of those go down, but anything people buy, or most goods and services people buy on a daily basis that don't require debt.
And that's the whole monetary system, which is in a mess right now. The future is not going to be the same. The future changed just recently. So right now, if your cash is flowing out of your pocket, sitting at home or whatever your business is, hemorrhaging cash, then that should be a sign from God. You better make some changes, because you've got to be able to change that cash to come back into you. So you get the bigger picture of what's going on. And he uses the exact terms an economist or a real sophisticated person would use. For example, repo, repurchase market, or commercial paper market, or swap lines. Those are crucial because they're showing you which way the cash is flowing. And right now, the repo market is hemorrhaging. You think you have money problems? The repo market has bigger problems. And I just saw Royal Viking Lines, or some of the big cruise ship companies. They just went bankrupt. They just declared, Lord & Taylor just declared bankrupt. And that's why the repo market is going broke, because all of the debt that financed what Royal Viking, or whatever the heck they are, or Lord & Taylor, or, Neiman Marcus just went bankrupt, all comes from the shadow banking system, which is the repo market, swap lines, and commercial paper markets. I think we're going into hyperinflation. We're going to go to deflation for a while. Prices will come down. But they pumped so much money, trillions. They claim it's 2.2 trillion, but we don't know how much they pumped into the repo market. See, we all know about the 2.2, but how much is going into the repo market? That's the question. And all that money flushes out, and there's no pork chops out there.
Before we continue, help us clicking that YouTube like button and subscribe now to our channel. This shows the algorithm that you valued this information. And it helps us spread that message. Sharing is caring. And now, let's continue.
Do you want to know one thing about crypto? I made over 3,000% in profit in a few weeks. Fact is, the traditional financial system, the traditional money system makes you poor, not rich. If you want to earn $500,000, $1 million, you have to wait until you're 50, 60, 70. In the traditional financial system, and you probably will still be broke. And you will be old. This is not a sexy combination, as you can imagine. But the question is, how can you start in crypto and make these profits? Where to invest? Where to start? My name is Gunnar and I'm from Germany, as you can hear, and things are a little bit different in Germany. More about that later on. Fact is, there are lots of different cryptocurrencies. It's a gigantic universe where beginners and professionals get easily lost. But there is light at the end of the tunnel. There are 7 key steps you need to follow to become successful in this market. You have to know them, and if you fail one of them, it's literally impossible to succeed in this market. Just an example, one of the key points is your exchange, and one of the biggest are, for example, Binance and Coinbase. These are trusted and well-established exchanges, but, and this is a big but, you won't find the super profitable coins on those exchanges. The unknown super profitable coins that get gigantic profits are not traded on those kind of exchanges. They are traded on much smaller insider platforms that are barely known. And I can tell you what those super secret exchanges are and why they are so profitable. And another super important thing are the right information sources. The point is, the internet is gigantic. There are hundreds and hundreds of YouTube channels, blogs, pages, and much more. And there are also market makers and influencers. For example, Elon Musk, he is not a crypto guy, but the moment he recommended Dogecoin, it went through the roof, to the moon, so to say. But why did he recommend it? Where did he hear it from? He didn't hear it from newspapers. And believe me, he is listening to someone. But you have to know who, and you have to react before he is reacting. This is really, really important. And these are only 2 of the 7 steps you have to follow in order to be successful in crypto. And if you want to know all of these steps in much more detail, and if you want to have a comprehensive checklist, here's what you should do. There is a link below this video. Click on this link and you will get the opportunity to subscribe to my channel. Click on the link and you will see a video where I explain the next steps. So see you soon. Click on the link now. I'll see you there.